feel so far away from all of you. But hello over there. Hello, everyone in the audience. Thank you so much for joining us on this talk about payments and adoption, which I really think is a crucial topic to talk about. When we talk about adoption with crypto and the challenge to actually getting to mass adoption and getting the general population on board, payments really seems like the option that's leading the pack. And we have a great panel today of people working on this from a lot of different angles and also different regions. And I think it's great whenever we can have the opportunity to talk about this, not from a US perspective, but looking at how crypto and payments work in different parts of the world and globally, and try and get rid of the blinders of the US that happens often in the space. So I think starting off, I'd love to hear from each of you, maybe a little background on what you work on, as well as how you think crypto and payments is different in different parts of the world, and not just looking at the US. Lisa, maybe we can start with you.
Oh, okay, good one. Hello, my name is Lisa Nestor. I am the Chief Strategy Officer at Airtm. Airtm is a full-stack cross-border payment platform that focuses on supporting the digital economy, particularly in emerging markets. And at Airtm, I do a lot of different things. I work closely with the executive team to think about our high-level strategy, but then I also spend a lot of time supporting infrastructure decisions that we make as a company, and thinking about our payment rails, whether that's through third-party partners that we work with or through our own native peer-to-peer marketplace. And yeah, I guess how payments work in different parts of the world. I think when it comes to crypto, the thing that I see that's most drastic is kind of around the use case. I think in the US and Europe, it's a very trading, kind of investment, speculation-based use case. And I'm not saying that doesn't exist in other parts of the world, but I do see a lot of crypto adoption that's driven by other needs or interests outside of just trading.
Amy?
Great, thanks. I'm Amy Fisher from Plaid, headquartered in San Francisco. Plaid operates in the US as well as Europe. You may know Plaid, if you're in the US, as the account linking platform from traditional financial institutions to apps like Venmo and Betterment, or in Europe for our lending use cases. One of the things that I think is really interesting, I'm the crypto connectivity lead for Plaid, so I focus on unlocking value and unblocking crypto and Web3 partners. So it's a really interesting position to be in within a Web2 company, because what Plaid does, both in the US as well as in our emerging areas, is we power the on and off ramps for crypto exchanges. And where we see a lot of activity is around data access. So we take it from that angle. But my background is primarily global. I've been at Plaid about 14 months, so it's a very interesting position, because I grew up here in Madrid, as well as in Argentina, and I saw firsthand growing up, and this is in the 80s, what it's like to not have access to your funds right away, in Argentina. So I think taking the personal mixed with the professional offers a broader perspective.
I'm Juan. I'm the Chief Brand Officer at Ripio. You may know me from yesterday. I was here yesterday. Ripio is one of the earliest and fastest growing companies, crypto companies in Latin America. We were based in Argentina. Most of our user base is in Argentina and Brazil. We are now reaching 8 million users, offering products and services for individuals and users and companies as well through our B2B division. We have partnered with most of the biggest fintechs in the sector in that region, and we are now expanding to Spain and to the US due to our recently licenses in both of these countries. And regarding payments, yeah, there's a lot we could talk about payments in Latin America. As Amy just said, it's a challenging space. But I'll leave Grace to present herself, because I've been talking a little about this yesterday, so to move forward.
Okay, sure. So, hi everyone. My name is Grace Anyetei. I'm the Regional Director of Operations at IDT for Boss Money. Boss Money initially was Leaf Global FinTech. It was created as a solution to allow for refugees to create a digital identity and be able to cross borders seamlessly with their money without losing it. We have recently changed the name to Boss Money and have expanded the use case. So right now we cover multiple uses, whether it's traveler solutions or cross-border trading. I like to think of it as mobile money on steroids because you can easily move money from one country to the other. We currently are in 10 countries across Africa and are soon going to expand across Latin America and also open up the US to across Africa and Latin America corridor. When it comes to crypto, I think across Africa there's a lot of misunderstanding. So because of that, what regulators just do is block it, that we don't want this here. But people still trade in crypto, and we've also seen a lot of stable coins and fintechs coming in to allow for that movement of money across the borders. I'm just going to pause there and we can continue. Yeah.
Juan, can I ask a quick question? Because you hear so much about companies saying there's too much regulation or uncertainty in the US, we're going to move outside the country. So to hear that Ripio is actually moving into the US is curious, especially when it's so oversaturated.
Yeah.
Obviously, it's very popular in Latin America, but I'm curious where you see the opportunity there, if it's a remittance play or if there's something else that you want to do in the US.
Yeah, it's mainly remittances. We are not planning to expand to the US or to expand to the whole Europe. But Spain and the US, particularly Florida, have a strong connection, not just culturally, but also in terms of business with the whole Latin America, especially Argentina, Brazil, Colombia, and Uruguay. And those are the places where our users and also our partners are based. So it's a strategic move that took us a long time because regulation takes a long time, but paid at the end from my point of view. So that's a strategic move that adds to our Latin American offering and Latin American ecosystem. That's the short answer to that question.
And continuing on that for everyone, I mean, I know it's great to move outside of the US as the main area of focus, but obviously it's still I'd say the center of power when it comes to crypto, and the regulatory uncertainty I know has a lot of impact globally, especially when you look at dollar-backed stablecoins, which are really the preeminent token, I would say, globally right now, especially for payments. And Amy, maybe we can start with you because you sit in the middle between Web 2 and Web 3. How do you think the regulatory uncertainty in the US impacts your global operations, or how you think about crypto globally?
It's really interesting because I think there are those that think, okay, well, maybe this crypto thing will work everywhere else except the US, where there's the US dollar. And it's been really interesting coming back here and speaking to Spaniards as well as folks from abroad about how regulations impact it. My interpretation, my thought, my hypothesis was that with MiCA, Europe is ready to go with stablecoins. It's not a perfect framework, but it is a framework in which to operate. I think that there are cultural implications beyond the regulatory environment that will add friction to the adoption curve. And it's been really interesting to hear about those cultural implications in terms of how someone is used to receiving a paycheck or receiving benefits from the government. And those ways of thinking can be very ingrained culturally that impede change. So I do see that we see the most volume, in developing countries and in countries where you don't have access to capital. But I think that with regulation, I don't want to be the buzzkill on the panel, but with regulation, there will still be additional friction points to lead to full-scale mass adoption.
Lisa, do you have any thoughts on that?
Yeah, I mean, I was reflecting on your question, and I think tying together the point around stablecoin adoption being this kind of like hit product in the world right now, that's being used everywhere else, but then there being this kind of uncertainty in the US, it does kind of have this interesting tension point. For us, we see it, although our retail base is global, we've had significant growth in the US through enterprise client onboarding. And I think that's important because what I believe is really focusing on, use cases that matter and ways that we can leverage crypto to really change and impact people's lives. And so at Airtm, that journey has taken us into this idea of global earning and people who want to access the digital dollar economy. And so although, basically you can't separate those things, right? You can't tell people that, oh, there's this opportunity to participate and have access to dollars in the dollar economy, but have complete uncertainty here, or it will result in something like mass adoption of Tether, which I don't think, anybody here would feel great at night if that was the case. So I think it's really important. I'm hopeful that we're going to see a lot of evolution over the next year or two, but I think it is a critical point. You can't have one and not the other.
Grace, do you have any thoughts? And I know also there's the added element that regulatory uncertainty may be even worse in some African countries than it is in the US.
Well, for us, it affects us in a couple of ways. Right now, we are exploring with Stella on the SDP product and just how we can implement that and partnering with companies which would bring in USDC. So how we see it on our side is that, I'm just going to say this in the simplest way. If the US doesn't figure out how to manage or regulate it in a proper way, then it affects how companies or how different organizations would want to work with us so that they can be able to fund that. And that means that we're not going to be able to move the money as seamlessly as we want it, which affects the end user. It could be that it's grants or it's aid, or even it's just payments to different gig workers across the continent, because we have such a high number of digital workforce who do remote work and earn from the US, and they would want to earn in such manners. So that complication that happens, as much as it is in a different continent, would affect different people across the continent who rely on our services to receive those funds.
And Lisa, I know you brought up Tether, and I feel like Tether is always the elephant in the room, especially when it comes to global payments, because, what I've heard when I talk to people outside the US is in the wake of the Silicon Valley Bank incident, the DPEG, and the crackdown in the US on crypto companies, a lot of people just don't trust USDC, or a company that's so closely associated with the United States. And obviously Tether has its own issues, but it is perceived as being safer in a lot of ways in many regions in the world. And you can see that in its market cap, which has gone up to, I think, 84 billion now compared to USDC, which is something around 20 billion or lower. How do all of you deal with that discrepancy between Tether and USDC and trying to meet users where they are? And Juan, I know Tether is big in Latin America, so maybe you can start off there.
Yeah. Once again, it's a big issue in Latin America. In Latin America and most countries such as Argentina, Venezuela, Brazil as well, the black market for in terms of remittances, but in terms of cash flowing within the country, was historically driven by cash, right? And over the last year, all these black market exchanges that in Argentina are commonly known as cuevas, caves, where you go and get pesos for dollars or vice versa. They rapidly adopted USDT on Tron. They especially use USDT on Tron. Oh, wow. And they changed it overnight, kind of in a few months. All that market turned digitalized in a way. They stopped using cash, which is, it's more dangerous because you go with a couple of dollars and it's kind of dangerous. The place is in downtown Buenos Aires, the capital of Argentina. And now that market started to go towards that way. So, and we, the exchanges, the wallets, incorporate other stablecoins such as USDC, and which is a market that is thriving in I mentioned that yesterday, for many months in a row during the last couple of years, stablecoins have surpassed the volume of Bitcoin and Ether in our daily trading volume. So that's a really insightful thing that I think that only, in a way, only happened as a phenomenon in Latin America, and especially in beaten up economies such as Argentina and Venezuela. And that's a super insightful kind of market dynamics that we all need to look at in order to learn from it. Because maybe more countries with that need, with that superb need of basically make ends meet or survival, go after those quick but kind of shady solutions. Shady, I'm talking about caves, not the stablecoins itself, just to clarify.
Maybe Tether.
So that's a thing that's actually happening, and it quickly stuck into the culture of people. So people that don't know anything about Bitcoin, anything about crypto, they started to know about the ecosystem through this exchange, because they were used to, over the last 20 years, they were used to exchange physical dollars, physical US dollars that were not within the banking system. So that's on the gray / dark side of the market. And then in exchanges, is in the regulated exchange world is basically what we said. And not just retail. Our whole B2B and wholesale business, which is also regulated in Ripio at least, is basically driven by stable coins through in and out Latin America. So I think that we'll be still talking about stable coins for many months and many years.
What's the volume breakdown when you talk about stable coins on Ripio?
The volume breakdown is over those weeks was like 60% of stablecoins compared to the 40% of Bitcoin and Ether, which is kind of 50-50. Of course, when Bitcoin surged on a bull run, almost everyone go after Bitcoin, right? But they usually buy, sell, and hold Bitcoin. But for daily transactions, they use stable coins.
And is that USDC and Tether? Like, what's the breakdown between those?
That's mainly USDC. Yeah, we have launched our own stable coin especially for Argentina, for an Argentina use case. We have a debit card as well. I think we will talk about cards and payments afterwards. But we have a debit card with Visa that gives a cashback in stable coins in USDC. And that's a real world solution for payments within the Argentinian ecosystem, and as well in Brazil.
Yeah. I mean, Lisa, I know you work a lot on the digital dollar. Do you see this current iteration of stable coins that are dollar-backed? Obviously, algorithmic stablecoins have had their moment in the sun. I don't know if they're going to come back, but do you see a different version, like something like DAI, becoming more popular, or do you see this dollar-backed version as continuing into the future?
Yeah, it's a great question. And I mean, even going back to your earlier one, I think it's really interesting to reflect on that word safe. And I think safe means different things in different scenarios. So, if you're looking to be holding a balance, if you're an Argentinian or a Venezuelan or, someone anywhere in the world, and you want safe currency, then I think the idea of having access to really regulated, very transparent USDC is great. But there are other scenarios where maybe you're more worried about slippage. Maybe you're more worried about, restrictions. And so something like USDT is a lot more safe. So, and I think that kind of extends to how we're going to see stablecoins evolve. Do I think that there's a place in this world for algorithmic stablecoins? Yeah, probably. Like the way things are going to evolve over the next 10 years, I think at a minimum, we're going to see experimentation around that to try and maybe achieve that tether market space. but in a more transparent way. So stability, but not restriction of the U.S. financial system. But I think it's been really exciting to see more platforms issue stablecoins, and how that evolves from like a liquidity standpoint, and also like brand, and how people perceive something like a PayPal dollar as being safe is very interesting as well. So I think we're going to see a lot more. We were just talking about this at lunch. Like, is there going to be 100 stablecoins a few years from now? And I think maybe.
Yeah. And Grace, I'm curious, because it seems like your users do a lot of cross-border payments, but what are the main barriers that you see now toward adoption? If stablecoins are easily accessible, at least on wallets, what are the issues for getting people to actually be using digital wallets?
Well, the main issue that we usually face, even many fintechs would face, it's primarily regulations. So you have to be very careful how you position it even to a bank. You would call it like a digital currency. Don't go and say stable coins. They'll just think it's crypto and be like, oh, no, you can't do that. But that's primarily the first bit of blocker that we can face. But however, when we expand it and for our system, what we explain is that the fiat and the digital currency are backed one-to-one. So it's within our closed environment and you can't trade it. We created the local stablecoin, so it's based on that local currency. Like for instance, if it's Kenya, it is KSC, it is UGXC, etc., based on the countries that we are in. The other bit of it is just on customer understanding from it and the usage of it and how they would use it. So majority of people across Africa are used to mobile money. And mobile money has created an ecosystem where the money is kept within the same environment. So you're able to send, you're able to receive, you're able to pull money from your bank account, deposit to your bank account, and pay directly to merchants. So what now we are starting to see, and with the adoption that is happening, is most people, if in your own app you don't have those systems that allow me to pay as I would in my own country, then I would not easily adopt to your product. So as we build, we are starting to think about the customer. How is the customer using the existing products? How are they using mobile money so that if they need to cross the border, like for instance, if I want to travel between Kenya and Rwanda and Kigali, I decide to take a taxi, I need to be able to pay the driver. So if I pull money from my mobile money account into Boss Money, I'm able to go to another country, exchange that currency into the Rwandan franc, and be able to push it to that driver just directly, such that they will wonder, oh, how did you pay me? And then I'll start telling them about this cool app called Boss Money and how they can pay. But for most customers, if you're not able to meet their needs of just keeping everything in their ecosystem, then the adoption won't happen. They need other ways to be able to pay.
If I may, I think that brings up a really great point about friction within the system. And one of the trends that we continue to see, and I also work on at Plaid, is embedded finance. So embedding payments into apps natively. And I think the intersection of embedded finance and stablecoins, crypto, is a really interesting thing because they have the ability to act like a dual flywheel to encourage adoption. Because the less friction you see, the higher the conversion is, in order to delight the customer experience. And I think one of the things at Plaid that we've worked very tirelessly on is that UX. And I think that's something we can all take away, where we're going from caves, to something that's out literally in the light, that becomes more normalized, but using these technologically driven tools to help drive the adoption that way.
Yeah, it's interesting because I saw yesterday in the news, I think Chase UK announced they weren't going to do crypto payments anymore. And you see this interesting trend where TradFi is both coming into crypto in a lot of ways and also pushing it away. Obviously, you hear all about Operation Choke Point 2.0 in the US, whether it's real or not, but the issue with being able to have access to banking. And maybe, Amy, it'd be good to answer this one. And again, as someone who sits in the middle between Web 2 and Web 3 and is probably trying to build trust in Web 3, what do you think will be the impact of TradFi's growing connection with the crypto space or pushing away of the crypto space?
It's interesting, and I'd zoom out a little bit and and think about not just TradFi, but companies that have been involved in the payments ecosystem in this internet era. So PayPal is a great example, right? And I think, there's that saying that we continue to hear, that a rising tide lifts all boats. But there's this interesting confluence of brands that have consumer trust, like PayPal. Depends on who the consumer is, right? But they're and who the audience is. But by and large, from a U.S. perspective, I think if you would do a survey, but let's not forget that PayPal once was an emerging company as well. So if you look at the adoption curve, it's very interesting to see this Web 2, Web 3 convergence and Web 2, Web 3 partnership to be able to extend the ecosystem and create more trust and safety among consumer and regulatory sentiment. So I really do think that this is a team sport in which we all need to work together and to educate one another and to educate the consumer and the regulatory bodies in order to help progress. And I'm mission driven in my career, right? So in terms of like unlocking, I love this unlocking human potential. Plaid's mission is unlocking financial freedom. I think that if we align around mission statements and use these tools, sometimes even not as they're intended, right? Like I really look forward to see what comes out of this week, everything that everyone is building, because we're very early in these iterations of developer activity on these networks, and it's gonna get good. It's gonna get good.
Juan, have you felt those banking challenges in the Americas?
Yeah, I mean, it depends. From my point of view, it depends on which sector is pushing innovation in terms of payments, in terms of, innovation itself, in terms of the development of new products and new services. This technology was born to be global. But as companies, we need to work locally to understand the problems of each jurisdiction and how to solve the problem of each jurisdiction, which might be quite different one from the other. Working with local teams in Argentina, in Brazil, in Uruguay, Mexico, Colombia, we understand that each country has his motives. The people. In order to make payments, to send money abroad, have different challenges, and they like the exact same product won't work on each one of them. And TradFi understands that as well. Like they have longer road than us in crypto. So, as a clear example, in Argentina, is the private sector the one pushing towards innovation and hopefully adding crypto to its services soon. We've been long working with Mercado Libre, which is the Amazon/PayPal in Latin America. Is the largest company in Latin America. And we've been a long-standing partner with them, dealing with these issues and debating around that in order to build the best products for our users. So, for example, the fast adoption over the last 2 years after the pandemic on QR codes for payments that basically washed away much of the cash-driven economy in Argentina. For markets, supermarkets, like local stores, they all accept these QR codes. And that's pushed by the private sector in Argentina because the public sector is way behind in terms of knowledge, in terms of understanding, in terms of on an innovation-driven mindset. In Brazil, it's next to Argentina, but it's totally the opposite. Like the public sector is pushing CBDCs, is pushing innovation, is pushing blockchain-based services. And they're quite ahead in terms of an innovative mindset. In terms of payment, they launched Pix, which is a great example globally as a quick and fast way of payment. And they're exploring crypto. They're already exploring crypto. And when you talk to them, when you talk to the regulators and the people that are building this, they actually know it. And it's overwhelming. After 10 years, Ripio has 10 years in the ecosystem. We have seen a lot. It's pretty gratifying to sit on the same table with regulators, with policymakers, local policymakers and local regulators and local companies that start to understand the value of crypto and start to ask the right questions. And I think that among the whole black market dim scenario that I painted before, I think that's the light to where to go, and that points out who to partner, who to talk with, who to debate with, and the greatest ideas will come from those tables. That's from my point of view what's happening.
Yeah, it's interesting from a U.S. perspective because there's so much fear around CBDCs. There's even a bill to ban any discussion about CBDCs. But you look at Brazil, and I know PIX isn't really a CBDC, but it seems like it's been hugely successful. And obviously the central bank is working on their own version of a CBDC as well. And it doesn't seem to have the same level of pushback, especially from the crypto crowd. Lisa, I'm curious because, again, I know you're working on digital dollar issues. How do you view government involvement when it comes to payment?
Yeah, I mean, I do think that listen, the government pushes huge amounts of payments every year in terms of, taxes and sometimes refunds and those types of things. So it's important. I think identity is always at the core of it, and thinking about what restrictions are in terms of, requirements for those types of things. I'm definitely hopeful, and I think it's always about how are you framing the issue and talking about it. I think in the beginning it was a lot of crypto as consumer harm. It has the potential to be really dangerous. We need to protect individuals, or capital flight issues, all those types of things. But we've gotten to a point now where I think there's a lot more room at the table to say, hey, this has a really beneficial impact for a citizen or a user. So yeah, I'm, on the fence when it comes to CBDCs. I do really love private market innovation, but I think, money at its core is a state task. And so at some point, society has to evolve, and governments do need to kind of be a part of the stack.
Yeah. It does seem like a radical view in some parts of the crypto crowd that the government should be involved with payments, but it would certainly shirk centuries, millennia of involvement. So I don't know, that'd be a big revolution. I don't know, any other thoughts on the panel here on CBDCs or government involvement with payments?
It's interesting, and in a previous role prior to Plaid, I worked very closely on CBDCs in public-private partnership. And I think that's the best way to push it forward. What we're seeing particularly in the US right now is when technology is used as a political weapon by those who may not fully understand it, which is super challenging. I think education here is huge, and I think CBDCs, like stablecoins, like APIs, technology, right? It's only as good as its use case. It's only as good as the humans behind the use case. And I won't even touch AI. But I think we do see new groups of people coming together. I am hopeful for the next generation in the US. I can speak to because as I live there now. But it's an uphill battle. And conversations like this, rooms like this, coming to the table. And I firmly believe in public-private partnership. And I'm an idealist at heart in terms of thinking about government and what's a government's job to protect its citizens. And that's why governments exist. Have we seen abuses of power throughout history? Absolutely, because humans are in government. And then once people get power, even if they have the best intentions, things can go differently. So it's a very exciting time to be alive.
Well, in Africa, last year we saw Nigeria launch a CBDC. So the e-Naira was launched last year sometime in October. I know the Kenyan government is exploring it. South Africa has adopted it. Namibia has adopted it. So the governments are seeing that if you really can't beat them, you need to join them. So we need to find a middle ground for them to just come in. And like Amy has said, collaboration is really key on how we move forward. A lot of people, yes, would not really like the government involvement because there are also some people who do some fishy stuff with using crypto and stablecoins. So it's just finding that balance and moving forward from there. But I'm also curious to see how it evolves in the next coming years. Yeah.
So we're nearing the end, and I want to ask one more question from each of you, which is, in my view, it seems like the major innovation in payments in crypto in the past 5 years has been stablecoins, and specifically dollar-backed stablecoins. So I'm curious from each of you, what do you think the next big innovation is going to be in payments? And Lisa, maybe we can start. I see you thinking this. Go to someone else.
Oh, the next big innovation.
Do you want me to go while you think?
If you've got one.
Sure.
Okay.
I think smart contracts.
There you go.
And I think if we can combine stablecoins with the better use of smart contracts language, it can provide a lot of efficiencies.
I agree. I agree. Yeah, smart contract innovation will drive the next wave of adoption and investment, and will create a virtuous flywheel all over the ecosystem. Definitely.
I actually agree with them because most regulators would want to see how would you protect the customers at the end of the day. So I think merging that smart contracts and the stable coins so that we can push forward and just see how that grows, and also evolving the payments landscape and seeing how can we pay with stable coins and how can merchants adopt this, whether it's through the card networks, etc., but just how do we evolve it to beyond remittances and evolving the payments use case as well.
I've got two.
Okay. Yeah.
Well, yeah, I'm going to say this was actually what I thought first when you said it, and then I was like, oh, it's not in the future, but I do think so. I am a believer in self-custody as like a primitive foundation for a new financial stack, and I think maybe not for all of the same reasons, but imagine if, 10 years from now, Bank of America is your, key assigner or your infrastructure provider, and setting up that self-custody account from which you can hold different variety of assets or participate in like other types of DeFi pools or just things like that. I think there maybe is more pressure in certain parts of the world than others to migrate that, but I do think it's kind of like a deep question that's going on in society right now about like how money should be stored and held and how much transparency there is. But along with that, I think microtransactions is kind of like a sleeping giant. And as we see this migration to wallets and kind of the ecosystem building out, this idea of 1 cent transactions anywhere in the world is actually feasible. And so excited for that.
If I can add to the micropayments, what I love about micropayments is that it's a use case that's not currently served by the current payment system, in which you need a new tool. And I think for enterprises, for financial institutions, to be able to see something where you can create value, where you just couldn't do it before, right? You can't pay someone half a cent per minute per podcast right now. Maybe that'll change in the future with this technology.
Yeah.
So I think it's exciting.
Yeah.
Maybe Lightning? Is that, yeah?
Maybe. Maybe. It's building also the credit and just teaching people how to manage that, because you don't want haphazard kind of lending happening. Yeah.
Yeah, but I agree that, but I think it will take less than 10 years to see that scenario. Not just 10 years.
Microtransactions? Yeah. Oh, yeah. I think it's I think that's kind of like a emerging thing, but you can't do it without having certain building blocks in place to really enable that, right? Like you have to get things on ledger. You have to kind of like be operating in the same asset. So we'll see.
Yeah.
All right.
I do also want to know what the smart contracts would be. Maybe we can talk about that backstage because we have 15 seconds left, but always more to discuss. Thank you so much for joining us today, and thank you everyone for coming to listen.
Thank you.
Thank you.
Thank you.